So what makes a good trader? My answer might not be what you're expecting. Most people assume a good trader is someone who has the ability to pick the right stock or to pick the right asset, knowing where the market's going to go. And I get that a lot of, Greg, what do you do? I'm a trader. You must be very good at picking the market. And I'm thinking, well, no, it's a common misconception of what a trader is. A good trader is actually a good money manager. Being able to manage money, being able to put your money in the market when you have an edge, understanding that you're not always going to be right. In fact, you don't need to always be right to make money. It's okay to be wrong. It might not work today, it might not work tomorrow, but if we do that 1,000 times, 5,000 times, 100, the more we do that, the more money I'm going to end up making. Ultimately, it's about managing your risks so that you are able to take those opportunities. Because if we take that bet once off and I put all my money in and I lose, then I'm out. I don't get that advantage to play out within the market. What is the difference between a top trader and a trader who's break-even trader or a trader who's losing money? And the answer is not their analysis. It's not their ability to call a market. It's their risk management. It's their trading psychology. It's the mental side. And I'm going to use a sports analogy. If you went and watched number 1 tennis player in the world warming up with number 100 in the world, you wouldn't know the difference. They both hit a beautiful ball. They've got great forehands, great volleys. But as soon as it comes to a match, you start to see those big points, 30 alls, the deuces, or the service slightly more spin or slightly further out. They win the big points. They understand the importance, and that's where you can see the difference. As soon as the match starts, you can see the difference. It's the same as a trader. Once you see the analysis and they're placing their trades, there's not much difference. You can see some poor traders have brilliant analysis, but they trade too big a size, or they don't know how much they could lose if the trade goes wrong. Where a top trader looks at a trade from a risk management perspective. How much can I lose if the trade hits my stop loss? Where most newer traders go, well, how much can I make? I'm buying gold 2,000. When it hits 2,500, this is how much money I'm going to make. Where the top trader goes, well, I'm buying at 2,000. My stop is at 1,900. This is how much money I can lose. Is that amount within my risk parameters? Yes. Am I risking less than I'm allowed to risk? Yes. Does it meet all my rules or my criteria? Yes. Looking at trading from a risk management perspective as opposed to throwing it out there and hoping how much I can make. One of the most important things that you could do is actually journalize what you're doing from two sides. One, it makes you accountable. You have to actually go back and look at that. Did I really place that trade? Did I lose my cool when I hit buttons? No, because you actually have to go and write it all down. So it prevents you taking from overtrading. It prevents you taking trades you don't want to do, but you're also analyzing. This is the setup that worked the most. This setup didn't work. Okay, I should do some more of that. I should do more of that. And spending the time to go through it and analyze it is an unbelievable difference to your trading, just from accountability perspective. Then it's taking ownership of yourself. Okay, we see a lot of the blame game in trading. It's okay to be wrong as long as everybody else is wrong. Okay, so when you get FOMC announcements and you buy and the market should go down because they hiked rates, but it goes up and you short and you get stopped out and you think, well, it doesn't make sense. I hiked rate. The market's wrong. It's okay. I lost money. Absolutely not okay. You lost money. You need to take ownership of it. Your analysis was incorrect. It hit your stop loss. Fair enough. Why did that happen? Go back and analyze your trades and take ownership. I take responsibility for that trade. Same thing when it goes in your favor. You're not lucky. You don't call yourself lucky when it goes in your favor. Even if it comes from a Trump tweet and it goes in your favor, you think you're a genius. So it's very important to be able to preserve our capital. That is the main thing that we need to do as traders. Know when we need to be in the market, when we don't need to be in the market. We don't always have to have a position on in the market. We need to understand, it's very cliched, but to let your winners run and to cut your losses early. It's imperative, but it's easier said than done. There's a tendency, especially when you've been on a bad run, to see profit and take it quickly. To let your losses add up thinking, well, the market's going to come back. Well, it doesn't always come back. So it's also important to know and acknowledge that when you're wrong early on, to acknowledge I am wrong and cut your trade, as opposed to going into an hopium situation. Right? You're sitting there hoping the market comes back. And ultimately, when you get yourself into that situation, it's some place you don't want to be as a trader, sitting there hoping that the market comes back. So those things I'll say is important. Also, not to be emotionally invested. You're not married to a trade. You're allowed to cut the trade. You don't have to hold on to it because you bought it. Your views can change. And ultimately, it's imperative that as traders, we adapt to the new information that we have, as opposed to getting ourselves caught and ultimately turning small losses into major losses. Trading is not an easy game. And when you have a broker not on your side, it makes it even more difficult. So the job of a broker is for it to be seamless. So ultimately, from a broker, you want good execution. You want good support in case you do have issues that you don't have to worry about who am I going to speak to, are they going to get back to me? Ultimately, you've got funds with the broker. So it's important that they're trustworthy. You can rely on them. And you want to look for brokers that are trying or doing what they can to assist traders. And this is where Axie comes into it. The fact that they offer Axie Select shows you what they're trying to do for traders out there. They're giving traders the potential support, the nurturing from the beginning to the end. So it's imperative to see those incentives that they're doing behind the scenes to assist traders. Ultimately, you want a broker that's on your side, not trading against you.